What's up, everyone? It's Kadi with Money Investing. In this video, we are going to be talking about oil prices, and that is going to be the big concern moving forward because there's been a couple analysts already talking about how oil is on its way back up to $100 a barrel. So in this video, I'm going to talk a little bit about what that could look like and why that's going to be such a big problem for inflation. And as always, if you guys enjoyed this video, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. The link to our Discord and Patreon is going to be down below if you're interested in joining us. Of course, getting access to all the binds alerts, options alerts, trade ideas, all the benefits, including private videos. And don't forget, the fundamental and technical analysis courses are currently on discount. The bundle is 60% off, and link's going to be down below, coupon code Easter. I do have another inflation video coming out later today, so that's going to give you a little bit more insight into the inflation print from next week. We've got very, very important numbers coming out on Wednesday, April 12th. That's a CPI day. But in this video, I wanted to talk a little bit about crude oil. So brace for oil prices to spike towards $100 a barrel with OPEC's cuts set to squeeze supply in time for driving season. So we learned earlier in the month where OPEC and OPEC nations, OPEC Plus, including Russia, Sudan, they're all looking at cutting supply of oil by close to 1.6 million barrels per day. Saudi Arabia, 500,000 barrels. Russia, an additional 500,000 barrels. And that's obviously a big issue because oil prices are generally moved between demand and supply, right? If demand's higher than supply, prices are going to go higher. If supply is more, demand is less, then of course prices are going to come down. So these right here, by the way, the OPEC countries, and these are organization of petroleum exporting countries. You've got Iran, you've got Kuwait, Qatar, UAE, Saudi Arabia, Iraq, Libya, Algeria, Nigeria, Gabon, Angola, Venezuela. I don't know if they're part of it anymore. Ecuador is also may not be. So there's like 13 to 14 different members. And of course, if OPEC Plus is including Russia, Sudan, some of the other countries as well. But combined, they control a little bit over 80% of the world proven reserves and over 44, close to 50% of the global supply, right, when it comes to production of oil. So they're a pretty big deal, right? When they are cutting supply, it's obviously going to put a lot of impact and pressure on overall oil prices, as you can already start to see that if you come over to US oil, it's trading back over $80 a barrel, and it did gap up quite extensively on the day of those supply cuts when they were announced. So this right here was the big gap up here and started trading back above $80, $81 a barrel and then started consolidating sideways. Now, why is this going to be such a problem? Why is this such a big concern for the markets and for the U.S. economy moving forward? Well, because of inflation. We'll talk a little bit about that in just a minute. But Paul Sankey ranked number 1 by Institutional Investor for Energy Independent Research in 2023. And I have broken his research papers, and we have talked about him as being an energy analyst. He's actually on point with his analysis for the most part. And you'll notice that he says the new normal for crude oil prices could be to climb to $100 a barrel. And Sankey Research president also warned that the supply side of oil market isn't looking super great. And the surprise move last weekend by OPEC and its allies to slash out output will squeeze supply in time for summer driving season, which will likely boost oil prices towards $100 a barrel, an energy analyst mentioned. And the key thing here is that Saudi wants higher prices, right? That's the big bottom line here, is that the Saudi wants higher prices, and they've basically said $95 per barrel is what they aspire to. They haven't specifically said that, but that's what we're kind of left to understand. So I think that would be the next target, definitely, is what he also mentioned about the cartel's de facto leader. You have the natural rise in demand because of the seasonality. So you go into driving season in the US, and you also have a lot of refineries to come back online. They are going to suck up more crude. So the crude market will be tightening naturally on a more seasonality basis. And he also warned that supply side of the oil market is not looking super great. Another analyst mentioned, and that's Russell Hardy from world's largest independent oil trader, Vitol Group, mentioned that prices go to $90 to $100 per barrel in the range for the second half of this year, and the prospects of a higher price in the second half of the year in the sort of $90 to $100 range is a real possibility. And another CEO of oil producer Pioneer Natural Resources, Scott Sheffield, says or believes that oil will approach triple digits this summer. We remain highly constructive on oil prices, and I'm still very optimistic that we'll move back into the $90 to $100 range sometime earlier this summer as well. So the reason why this is such a problem is because inflation has been coming down. It's been coming down. Why? Because oil prices have been coming down. So if you come back from where we were back in June, so June 22, when oil prices hit a peak of $123, we pretty much saw it dropped by 47%. That was pretty significant, pretty sizable drop in oil prices. But the problem, and of course, we've seen inflation overall prices also come down because why? Oil is a raw commodity and used in many goods, right? So we got gasoline, we got jet fuel, we got plastics, petrochemicals, asphalt, right? So for construction, cosmetics, propane, cooking gas. Not only that, it's the biggest oil use is transportation, which is 66%. Therefore, when oil prices rise, all goods which are transported will be affected by higher oil cost as well. So this is a chart showing you oil prices with respect to inflation. And you can actually see how positively correlated these are. Like as soon as oil prices go up, and that's the line in red, inflation starts to creep up to the upside. We saw that immediate crash back in 2008 when oil prices dropped from like $140 per barrel all the way down to $40. Inflation actually went negative. We saw deflation in the US, and that was also during that global financial crisis, during the Great Recession. And then oil prices once again recovered. So did inflation. We once again saw oil prices decline in 2014, 2013. And once again, you saw prices came down almost to a deflation territory. But you can see the correlation now where oil prices once again rallying and doubling from about $30, $20 per barrel to now sitting at well over $80 a barrel, with expectations of us hitting back up to over $100 a barrel, and inflation's obviously spiraling out of control, hitting a 40-year high. Although we are on our way down, but we can't be complacent, right? Because oil prices right now, the expectation is for us to see that move once again back to the upside. So going over to some of the other things here. So from January 2007, 2008, oil prices rose from $54 to $144 in less than 18 months. It did cause inflation, but only 5%, quite small compared to the size of the sustained rise in oil prices. Interestingly, as oil prices collapsed in the credit crunch of 2008, CPI inflation fell into negative territory for the first time in decades. But this right here was also a pretty substantial sudden knee-jerk reaction to moving oil prices back down. We did stay higher for some time in the 140 levels, but then immediately after that, when the economy kind of hit a brick wall and we were in a great financial crisis, we did see oil prices pretty much collapse all the way down to low 20s and $30, $40 per barrel around those prices. And as a result, we did see inflation also roll back down. If the bottom line is, if oil prices remain sustainably high, that's going to be unfortunately an issue. And if you come over to how energy prices have pretty much dictated where inflation is going, if you come over to BLS, and that's going to be Consumer Price Index, and we're going to come over to the charts and then go over the percentage categories and then talk a little bit about energy here. It has been coming down. So you can see that as soon as June of 2022, it was up 41% on a year-over-year basis. You come back to June of 2022, prices were at $123, $124. And as they have started to come back down 40%, we have seen pretty much energy as part of inflation come down from 41.6 all the way down to 5.2% on a year-over-year basis. So this is what's going to be the real concern here. This is what's the real potential blind spot, because if energy prices once again start to move back up, that's going to put a lot of pressure on inflation. Now, there is one way to obviously play this. XLE is one of those ETFs that does benefit as oil prices move up. Energy companies benefits. You've got Occidental, you've got Chevron, Exxon. A lot of these companies that do benefit in terms of revenues and earnings with higher oil prices. And we also know Warren Buffett has been plowing money into Occidental pretty much week after week and building up a bigger position. And when it comes down to energy demand, we know there's going to be demand destruction eventually. We know that prices are eventually going to come down because there is going to be some level of demand destruction as we are moving away from fossil fuels and carbon over to more renewable energy and electric vehicles and battery and solar and wind. But the question remains, can this transition happen fast enough? Because we don't want to get into a situation as an economy, we don't want to get into a situation where there is supply that's going down, right? The proven oil reserves between Saudi Arabia, Iraq, Iran, all these OPEC plus countries, the supply, obviously they control majority of that supply and they can control the prices through that supply and how much they end up producing. But we don't want to get into a situation where supply is going down and the demand is still relatively high for fossil fuels, for oil, for carbon, and we're not able to transition fast enough over to EVs, because that will most certainly skyrocket prices back up. Could even skyrocket oil prices to a level we may have never seen before, right? It could be even to an extreme level. But that transition needs to happen over to, again, renewable energy, electric vehicles. And then another technological advancement that needs to happen is with respect to batteries and other forms of energy, and can it actually power all forms of transportation when it comes to rockets, planes, ships, all those things that pretty much utilize oil and fossil fuels to run. Again, transportation makes up 66% of oil demand, and all of it is dependent on global trade. So, in my opinion, energy companies you can't write them off just yet, because oil prices are still relatively higher, and they are expected to go even further up to as much as $190 to $100 per barrel. That's going to put us roughly around somewhere in this range. We are still kind of battling through this resistance, a breakout over $81, $82, and the next target is going to be $93. If you do see a breakout past this level for oil, I'm going to be interested in something like ERX or XLE, which is going to be your two sort of energy ETFs, right? ERX is a little bit more leveraged, so be careful. It is a lot more risky compared to something like XLE, which is more stable, more consistent, has some of the largest cap energy companies, including Chevron, Exxon, all those giants in the oil producing world. So let me know your thoughts down in the comment section below. And again, it's definitely going to be affecting inflation if oil prices continue to move up. Inflation expectations are going to decline, unfortunately, to the downside. So let me know your thoughts down in the comment section below. As always, if you enjoyed this video, found it helpful, make sure that you drop a like. Don't forget to subscribe to the channel. If you're just joining us for the first time, link to our Discord and Patreon is going to be down below. As always, happy investing, and I'll see you all in the next video.